Hello and welcome to Mortgage Watch. This is real estate, credit, financial, and mortgage news that you can use. I'm Ilan Awerbuch of Unitrust Mortgage in San Diego. Well, leave it to Americans to always have a lot of ingenuity. Even though other companies are coming up with different technological inventions, here in America we are innovators. There's a new thing going out right now, and it's called Buy and Bail. And it's a program where homeowners who are having trouble making their mortgage payments and also very concerned that the value of their home has dropped considerably, are going out and buying a new home at today's prices and then basically bailing out or just leaving their old home to go into foreclosure. It's not real good for your long-term credit, but I guess it could save you a couple of $100,000. And so what they're saying is that they're going to lease and rent out their existing home after they buy their new home, but they have no intention of doing that, and after they close on their new home, they just walk away from the old one and let it go back to the lender. I know in some areas, of course, values have dropped quite a bit. In some, they have not dropped that much. But again, very, very innovative. Of course, everyone's going to be taking steps to kind of crack down on this, but this new buy and bail is definitely an innovative American program. It just responds to the times, for sure. It's kind of hard to motivate someone to make a payment on their house when they've lost a couple $100,000 in value on it. It doesn't seem to make much sense. And other good news, the Senate housing bill, which has moved along and is now being negotiated with the House, some estimates have been done on that, and it's believed that that is going to actually show a profit for the FHA. Because the FHA collects insurance on every loan and will collect insurance on these new loans, when you collect insurance, you do pay some out, but the idea is that you make money. And it looks like there are different estimates for what will be made. The estimates range from $300 to $800 million. And if the program takes effect as it's expected to, the upper end could be about $800 million in profit. So it's not a money loser. I know a lot of people are concerned about the government getting into bailing out homeowners. It isn't a giveaway, folks. It's an insurance program, and there's a big difference. In the previous episode in the 1930s, when the government stepped in a big way to form a housing agency to insure troubled homeowners, that agency also ended up with a net profit after years of helping people. In fact, next week we're going to be having a special on that housing agency that was created in the 1930s. It's very interesting how it was created and what it did, and it was a very, very positive thing for the housing market. So hopefully Congress, the Senate, and the White House are going to get off their you-know-whats and get this thing negotiated and onto the field, because we hear a lot of talk about it, but it hasn't really been finalized. And after it's finalized, there'll still be a couple of months before it takes effect. So we're hoping that that can really can come out here in the next couple of months, at least before the end of the summer. There's new rules being put out by the Department of HUD for mortgages in general, and the real losers on that are going to be mortgage brokers. The gainers are probably going to be the average consumer. Mortgage brokers are going to be facing very, very tough lending rules. They're going to have to be giving out good faith estimates, which are the law now, but they're going to be mandatory, and they're going to be having to stick with those rules. What the Fed is trying to avoid is the game changing on homeowners or borrowers when they go to sign loan docs. So it's expected that lenders don't do that, and brokers, some of them have. Well, these new rules are really going to force brokers into a very, very tough situation. As most of us who have had home loans know, some of the things change, and some of the parts of the process can change. Once your loan is locked in, well, it's pretty sure what it's going to be, what the rate is, and fees, and so on. These new rules are designed to protect that from happening, from any changes happening. Mortgage brokers are also fading in huge numbers in the industry. Some estimates have them down by as much as half. This is a tough time in the mortgage market, as you all know, having watched the news. Mortgage lenders are closed, mortgage lenders are struggling, and mortgage brokers, many of them have gone out of business. We hope that the more reputable, established brokers are able to stick around. The bottom line of all this is that the economy is very, very sluggish, and that's what's causing all this. As all of us know who are going out and filling gas tanks in our car, or going to the store and buying commodities and food, prices continue to climb. There is an estimate that oil prices are at an arbitrary high because of all the speculation. They haven't come down yet, but there's investigation of what's going on in that market, and hopefully we will see oil prices drop. If oil prices drop, the Fed is going to be able to maintain or lower interest rates. If they don't and they go up, the Fed's soon going to be forced to just either do nothing or raise rates. They probably will not raise rates until the end of the year, but it's hard to say in this market with what's going on. Our short-term guesses for the next week are that interest rates will stay steady or perhaps go up a little bit. And this is just due to everyone's nervousness about the economy and potential inflation. The Federal Reserve Group meets next on June 24th and 25th. The odds are that they will do nothing. They will not lower interest rates. They will not raise interest rates. However, there are a lot of people starting to hit the streets and look at real estate. Real estate has come down in most areas to be a very attractive buy. We've seen it here in the San Diego area, and reports are that it's increasing throughout the nation. So that's very, very positive that prices have hit the part of the market where people feel it makes sense to go out and buy, and that'll create some strong underpinnings for the housing market to get back on its feet. That's it for this week. We look forward to having you join us next week on Mortgage Watch. I'm Ilan Awerbuch with Unitrust Mortgage in San Diego. Thank you.